Hey there, it's Trisha for WINvesting, and today I'd like to do a video and show you how to use divergence in your trading. You can use it for taking a trade, you can use it for managing a trade, and what I'm going to do is I'm going to show you how I like to use it, and I hope that you find it helpful. So what you're looking at is the NQ on an 8-tick range chart. You can use any type of chart you like. You can use a time-based chart, tick-based, any size, any instrument, whatever you like. And basically what divergence is when price is doing one thing and you have your indicator doing something else. So for example, I've got price giving me higher highs. You can see higher high here than here. Well, on my stochastic, and this is a stochastic, let me just show you the settings on those because I'll wind up getting a lot of questions. So these are the settings that I'm using, so you can compare with your platform and use the same if you like. But you can use any indicator that you already have on your chart and you'll be able to spot divergence. So it's when you have price doing one thing and your indicator doing something different. So as I said, price, we have a higher high here than here, while on my stochastic I have a lower high here than here. So what that's telling me is that I'm probably going to have price pull back a few bars. Now if you're an aggressive trader, now this is a little early to do this, it's 9:33 in the morning, but you're coming up to Friday's low here. You can see this orange line, and we wind up getting divergence to the downside. So you can go ahead and take a short off that. You can use the 200 period moving average or 90 period moving average. A lot of people will use those as areas to trade off of. And in this case, you're up at the 200. So again, still divergence to the downside. You can go ahead and take that. Here on price, we've got equal highs. You can see here and here are the same high, while my stochastic is not doing the same thing. That's telling me a lower high here than here. So that's telling me that we're probably going to pull back from there. And you can watch for that over and over again. And if, let's say that you were getting ready to take a buy and you see divergence to the downside, you're going to hold off. You're not going to take that buy until that after the pullback, and then you would look to see if you could buy a bounce or something. And then possibly you might even be able to find some divergence to the upside. But you can do range trades using divergence where, let's say you have a day where price is just chopping sideways, back and forth to the same support, resistance, support, resistance, support, resistance. So you get up to resistance and you have divergence to the downside, you can go ahead and short. You get to support and you have divergence to the upside, you can go ahead and buy. It's really a great, I find it really great in giving me a heads up when I'm in a trade, or like I said, if I want to take a trade off resistance or support. Here you can see price, we have lower low here than here, while on my stochastic I have a higher low here than here, so that's telling me we're probably going to bounce. Now you can see this real time, so even though this is you're looking at this morning, obviously it's already happened, you will be able to spot these real time. It just takes a little bit of practice. Here you can see we've got a lower low here than here, and on the stochastic we have a higher low here than here. So if it fits your trading plan and you're at support, you could go ahead and buy it, the divergence to the upside. Now, I'm not going to say that just because you see divergence means take a trade in that direction. You really want to be at support to take a buy or at resistance to take a short when you're using divergence, because you never know if it's going to be just a one bar in this case a 1-bar bounce off of divergence, or is it going to be a 10-point move off of divergence? You don't really know. So at least if you're taking it in a high probability area expecting a bounce, the divergence is just confirming it. So here, for example, we have support here at 64.75. You can see on price we've got a lower low here than here. On our stochastic we have a higher low here than here. So you can go ahead and buy that bounce. Let me just show you an example of price doing the same thing as the indicator. So here you can see price, we have a lower high here than here, and the same thing on our stochastic. So that's not divergence. What we would be needing to have divergence in this case would be, we need to have a higher high here than here, and then a lower high on the stochastic here than here, and then that would be telling us divergence. Okay, so it's when their price and your indicator don't agree. They're moving in different directions. Okay, so I hope that you find that helpful, and if you have any questions, you can always send me an email, and I'll be happy to answer any questions that you have. So I hope that you have a fabulous day. Take care.